Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of April 29th through May 3rd, where we'll try to see what may the Fed do now, and we'll talk about some trading strategies and trade ideas regardless of what the Fed does now and how we can make money trading, again, regardless of what the Fed may do now and or in the future. So let's get started. Welcome, Sydney Osborne. Thank you for joining us. Glad to see you today. Hope you're doing well. So here's our Google document with our notes for part one of our weekly trading game plan for April 29th through May 3rd. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes documents contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our market strategies, trade ideas, etc. We keep all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder. So you can refer back to the notes from this week as well as previous weeks. And you can also find a direct link to that Google Drive folder in the description box below. Welcome to Ricky Kahn, Alan Krantz. Thank you all for joining us today. Hope you're doing well. So first we'll look at how the markets ended up in FinViz on Friday. So we see the NASDAQ had a very exuberant run. Again, positive earnings from Google and Microsoft. So big run in the NASDAQ, recovery in the NASDAQ on Friday. Dow was pretty much flat, got a 0.4% gain, and S&P about half the NASDAQ, about a 1% gain. So we see we got about 70% advancers, 28% declining, 60% new highs, 40% new lows. We've now got 35% above their 50-day moving average, 64% below, and about 60-40 above their 200-day moving average. So again, very bullish day, all really, in my humble opinion, driven by the positive earnings of Microsoft and Google, which then propagated into Amazon, the other Magnificent Seven. Apple not participating as much, pretty much flat. Got a little bit of a pullback in Tesla, and this general sentiment in Meta is negative. They had poor earnings. Their year of efficiency sounds like it's over, and they're spending money significantly again. Very positive for Google again. In my humble opinion, it looked like they were rotating. We had previously seen money going into energy out of tech, and I think that rotation reversed, and I think they were selling energy and buying the Magnificent Seven, also utilities. So again, sector rotation out of utilities back into the Magnificent Seven. So some of the news: Tesla and Microsoft presented two versions of AI. Investors like both. Again, Tesla's earnings in general weren't all that spectacular, but Elon Musk's discussion of their future plans were received very positively, and we saw a bounce back in Tesla. Again, Microsoft just killed their earnings. They're making a lot of money. Their cloud business doing very well. And again, that bled over into the other cloud providers, Amazon, Google. Again, Google, very positive earnings as well. We also see S&P post best week since November. NASDAQ surges 2%. Big tech drives the S&P to best week. Again, I think the whole positive pop, particularly in the NASDAQ, driven by the Magnificent Seven, mostly Microsoft, Google, Amazon. So we've seen oil has been kind of range bound between 80 and 85. Not not a lot of news coming out of the Middle East, new news. So pretty much range bound between 80 and 85. We saw futures roll over and natural gas popped up into the close to 2. We'll see that again in the futures. Gold's been consolidating right around 2350. It did pop up, I think, as high as 2360 or so on Friday. But again, it looks like it's consolidating right around that 2350 area. The other futures we can see very positive on the NASDAQ, pretty flat on the Dow, and again about half as much on the S&P. Again, my humble opinion is going to be driven mostly by the Magnificent Seven. We'll see the yen's just getting killed. So we'll see the DXY's 105, 106 area, but a lot of that is his weakness in the yen. We did have Treasury yields up in the 4.8 range. They retreated somewhat on Friday, so we saw a little bit of a benefit to interest rate sensitive sectors like real estate on Friday. Again, we'll talk about what the Fed may do, what impact that may have on Treasury yields and other commodities as well. Welcome, Gerald Pitts. Thank you for joining us. Hope you're doing well. So let's look at a breakdown of the indices and the technology components. So I've got these screeners in the notes. Also, you can find these links to these screeners in the screener sheets of our ETFs and watchlist screeners. So quick and easy access during the day. So again, we see the Dow's got a very narrow channel. It's just kind of oscillating, generally pretty flat. IWM did have a bounce. You can see it's, got established kind of a support level, established a bottom. It is still floating above that longer term moving average, which has gone kind of flat. So I wouldn't be surprised to see a little bit of downside in IWM. Again, small caps are going to be more sensitive to interest rates. And again, we'll talk about what the Fed may do, but they need cuts. And if we don't get cuts or note of any cut coming soon, that may be negative for IWM. Again, we saw the rally in the Qs based, again, in my humble opinion, mostly on the Magnificent Seven. And again, SPY slightly rally similarly. But again, we see the SPY's got a lot of room above the moving average. Q's not quite so much. So again, any kind of disappointing news, negative earnings of any of the Magnificent Seven that haven't reported yet, we could see some significant downside, particularly in the SPY and the NASDAQ. Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. So if we look at a breakdown of the technology sectors using these leveraged ETFs, so these are all the long leveraged ETFs on the various technology components. So we can see the ARK did have a slight rebound, very weak, however. I think that rebound's probably mostly that they were buying Tesla, and Tesla had a rebound. But again, it's below its long-term moving average. That's going to provide resistance. And again, plenty of downside in ARK. So I wouldn't be surprised to see more downside in ARK. Again, the FANGs. We had mixed bag of earnings so far in the FANGs. Meta disappointed, but Microsoft and Google beat handily. We've got Apple coming up. I think Amazon coming up. So again, I think a mixed bag on the FANGs, but we did see that recovery based on Google and Microsoft. Semiconductors rebounded, mostly driven by NVIDIA, both Facebook and Microsoft, or Facebook and I think Microsoft talked about, buying more NVIDIA chips. Tesla also talked about buying a lot more NVIDIA chips. So again, SoxL rebounded, I think, again, mostly driven by NVIDIA. There's some weakness in other semiconductors, like Intel was very disappointing. Their forward guidance disappointed, even though they beat on earnings. So again, a mixed bag in semiconductors. NVIDIA very positive, Intel very negative. We'll see if some of the other semiconductors bring the SoxL back down. Plenty of weakness in the biotechs. Again, biotechs are in need of interest rate cuts, in need of generating capital. So again, plenty of downside. Again, below its long-term moving average, plenty of downside. I wouldn't be, at all, again, surprised to see more downside in Lab U. Again, the inverse of Lab U is Lab D. Overall TQQ is just like the QQQ we talked about. It's just leverage, so same story there. Broader technology, again, not as strong. We did get a rebound off that support. You can see that support line's much closer to its longer-term moving average. and that's going to provide support. So I expect, chop around that moving average in the broader technology. So not a lot more downside potentially there. Got a strong double top, just above 80 or so. Again, the inverse of TECL is TECS. Good morning, Walter Lyons. Thank you for joining us. Hope you're doing well. Okay, next we'll look at the groups, sectors, industries, etc. Let me grab a quick drink and we'll go over the sector analysis. Okay, here's the groups and sectors in FinBiz. So again, we see that rotation on Friday out of energy utilities, out of financials, out of defensive, and into technology communication services. Again, mostly end cyclical, but again, mostly the Mag 7 stocks buoying that up. So for the week, technology communication services now regained the top spot, energy, financials, basic materials at the bottom. For the month, however, we see energy was one of the top performers. Technology was down, near the bottom. Real estate's been pounded by the increase in bond yields, interest rates. Healthcare pretty negative. Again, technology. So we saw that strong rotation out of energy, out of utilities, back into technology. Again, in my humble opinion, I expect that to continue unless or until we get disappointing earnings out of any of the other Mag 7s. And then we would probably see, more defensive stance. Also, again, the Fed interest rate decision, if that disappoints, if they're not going to cut it as soon as the market expects or wants, again, that may cause a defensive rotation again as well. So for the quarter, again, energy and industrials. Another thing, we saw a slight rotation out of industrials on Friday. So again, I expect some downside in industrials rotating into technology. Okay, we'll look at the highlights from economic data from the past week, and then we'll also talk about the upcoming economic data, including when the Fed interest rate decision is. So firstly, I'll go over some of the highlights, some of my notes, and then we'll look at the whole calendar from last week and also this week. Just a quick reminder, as the important economic data comes out, I try to capture it from investing.com and or other news sources and post it as quickly as possible in the Surf the Markets channel in our Discord. Our Discord is free to join. Again, a great way to get, real-time economic data, real-time news, and we'd encourage and welcome everyone to join our Discord. You can find an invite to our free Discord in the description box below. As you can see, I try to capture a screenshot of the economic data out of investing.com as well as the raw data, and then also any news that gets posted. Also, they capture, natural gas and oil inventories when that comes out from FinBiz, etc. So again, we'd love to have you join and actively participate in our Discord. And also, again, a great way to get real-time economic data. So again, not a whole lot. Monday through Wednesday. Thursday, we got jobless claims, GDP data. So we can see it was kind of a mixed. We got initial jobless claims was below expectations, continuing jobless claims below expectations. So again, as we'll see, all the jobs data says, again, the jobs market is resilient, and That will indicate, the Fed's not at any risk of high unemployment starting up. Then we got core PCE prices, which was above expectations. So inflation is continuing to be above expectations. So that's, again, a negative. So again, we saw some, negativity in the market, and GDP was significantly below expectations. Now, still positive, so no fear of a recession, but definitely an indicator of a slowing economy. But we're not seeing that show up in the unemployment. So again, the data so far, no indication that they need to cut anytime soon for fear of increasing unemployment. This was interesting too, is consumer spending was slightly below expectations. Prices much higher than previously. So again, we still got, smoldering inflation, and that will be the Fed's focus, needs to be the Fed's focus, is to beat inflation. They don't have to worry about increasing unemployment at this point. So then Friday we got more PCE. Core PCE was pretty much in line. Index was a little above expectations, but only slightly. Personal income flat, but spending above expectations. So again, the consumer is, outspending what their income is increasing. And we also got sentiment, and this was interesting as well, is now 1-year inflation expectations at 3.2. So that's still in the 3 handle. I don't expect the Fed to like that. They want the consumer to anchor inflation at 2% rather than 3%. And again, that indicates they need to do something to get the consumer to see inflation coming down. 5-year still at 3%. So again, anchored at 3%. You can see some deterioration in consumer sentiment expectations. So consumers not as happy. They're seeing higher inflation. And again, that's something that the Fed will need to address. So we'll go back and we'll look at the rest of the data from last week. Okay, T-bill auctions, pretty much in line. You can see the yields are in the 5s. So again, the very short bills, Treasury bills, are now, significantly into the 5% range. Building permits down, but better than expected. New home sales quite positive, which is a little surprising given the high mortgage rates. Crude oil stocks significantly down. So again, oil prices kind of 80 to 85 range bound. Mortgage applications actually up a little bit, or mortgage rate was up a little bit. Applications down pretty significantly. Durable good orders a little weak. Again, crude oil inventories significantly down. But again, with the easing of tensions in the Middle East, we didn't see a significant pop in oil prices, just a little bit. Five-year notes at 4.6, almost, 4.6. Talked about jobless claims and GDP. Retail inventories down a little bit. Pending home sales significantly higher. So again, I guess people have given up that mortgage rates are going to come down anytime soon and probably just starting to buy. Natural gas inventories went up significantly. And we can see all those T-bill auctions in the high 4s and 5s. Talked about core PCE and PCE, spending, expectations, Baker Hughes oil rig, so that actually dropped. So that's a little interesting. So they're trying to, hold the oil prices up in the, low 80s. So let's see what we've got coming up. Is anybody having audio issues? I see Walter lines. Is there any issues with the audio? Please let me know. So if we look at the calendar for next week, again, we've got bond auctions, got some employment data on Tuesday, housing data on Tuesday. It's some local consumer confidence, mortgage rate data on Wednesday, ADP non-farm employment change, ISM manufacturing, the JOLTS is going to be important, and that comes out, right before the Fed's going to announce their decision, so they'll be in their meeting. I expect will have that data early. But again, if the job market's out of balance, that's something that they're concerned with. So then again, at 2 p.m. on Wednesday, we get the FOMC statement. We get their interest rate decision. It's expected to be no change. So what may the Fed do now? The expectation is nothing. No change, no cuts, no raises. And then at 2:30, we have Powell coming out for the FOMC press conference. In my humble opinion, what he says is going to be of the most importance. So I expect some, significant volatility just around, what he comes out and says. I highly expect the big question to be, when are they going to cut? How much are they going to cut? When are they going to start cutting? How many cuts, etc. I think the whole discussion is going to be around rate cuts. Again, in my humble opinion, I think he's going to, stick to their guns that inflation's too high. The job market continues to be resilient. They have to bring inflation down, for everyone's benefit. They need more data. First quarter inflation seems to have, showed that their progress on inflation has stalled. It's not coming down towards their 2% target. They want to see, consistent trend towards their 2% target. They're not getting it right now. So I expect them to say, they need more data, they need more confidence before they can, make any decision on cutting. So I think they're going to continue to defer. Again, we'll look at the probabilities in our strategies and see what the market thinks. But again, I think there's going to be a lot of people hinged on what exactly Powell says, how he answers that question on, when are they going to cut, how many cuts, when are they going to start cutting, etc. Then after we get the decision, then we get job cuts, more job data, initial jobless claims, non-farm productivity. And then non-farm payrolls on Friday. So again, more volatility, again, based on, if this comes out different from expectations, more negative, then that actually may be a positive for the market. Again, I expect Powell to come out and say, they have no reason to cut anytime soon. They have to wait and see. They need more confidence, and that's going to take time. And also Friday, ISM non-manufacturing, etc. And then right after the meeting, all the Fed officials are going to start coming out and talking about it. So we'll get differences of opinion after, they announce their decision. We're also, now in the heart of earnings season. So we've got some significant earnings. I think Alan or someone commented AMD and SMCI. Not sure what day those were. I think he said Thursday or so. So again, you can do a find on this calendar on Tuesday. So Tuesday we've got Coke, AMD. He said SMCI as well. I think Amazon is like Thursday. Amazon's Tuesday as well. So yeah, we've got the, more of the Mag 7 announcing. Microsoft had great cloud revenue. We'll see if Amazon is matching that cloud revenue. Also, a lot of talk about AI. Again, we'll see how they do. It could get a good pop in Amazon if they're seeing similar growth in their cloud business and AI business. PayPal, etc. So tons. There's SMCI. So 3M. So tons of earnings. I would highly recommend you go through this list and see company sectors that are important to you. And you can hear our discussion on how to make money trading when earnings matter. Earnings definitely matter. And as we saw with like Microsoft, they did very well on earnings, but their guidance in terms of that they're going to be spending a lot more CapEx hit them pretty hard. Same thing with Intel. So it's not just their top line earnings, it's also their guidance going forward that matters. Also, they'll probably update this again on Sunday, so you can get a nice graphical calendar of the major earnings upcoming with this economic calendar from Webull, as well as the highlights of the top economic data. So again, they'll update this tomorrow for the following week, but you can see the types of data that they provide in a nice, quick graphical format. So if anyone else has any other earnings they want to highlight in the chat, that would be helpful. But again, we'll see a near-term calendar also in Webull in a second. So let me grab a quick drink and we'll go to the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can still get 75 free fractional shares of stock by opening and funding an account with 25K or more. Under 25K, you get 20 free fractional shares of stock. They're also still offering up to 4.5% match on contributions to an IRA. And also, as we'll see, they're also now offering futures trading, and they've got a special offer on futures trading that I'll highlight in a few minutes. Please let me know if you guys are still having audio issues in the chat. Let me know if it's okay. Thumbs up if it's okay. So I'm using the market screen on the online browser version of Webull. So here we can see in the histogram on Friday, significantly more advancers than decliners, 3,600 advancers, 2,000 decliners, but the vast majority of the advancers were all very small. So again, my humble opinion, I think most of the increase in the NASDAQ driven by the Magnificent Seven and really just a couple. Thank you for letting me know that, Walter. So I'm glad to hear the audio is okay. So again, I think just, Microsoft, Google, primarily driving the increase in the NASDAQ. We'll see in the inflows. This is, typically we saw an outflow in the NASDAQ on Friday, and this time we're seeing, an increasing inflow in the NASDAQ, and we see our traditional, bump up in the NYSE on Friday. So, definitely an increase in interest in the NASDAQ, again, based on Microsoft and Google's earnings. So again, a quick reminder, you can get a very near-term earnings calendar here in the calendar section of Webull, so you can see who's coming up in the very near term, also expectations, estimates, etc. of earnings. So again, a very good real-time version of seeing who's coming up with earnings soon. So we'll look at the best performing industries for the week. A little interesting that education came out on top. Infrastructure, transports, that's interesting. Was some weakness in transports previously. Fintech, semiconductors, again, I think mostly driven by NVIDIA. Automobiles slightly positive. Again, a lot of education positive. I guess that's a significant rebound. Probably beaten down quite a bit. Electronics, oil and gas, utilities, so quite a mixture. Uranium positive, but near the bottom. So again, we saw, uranium's been running pretty high. Got the top ETFs. So TQQQ, so leveraged on the NASDAQ. That's probably emerging markets. Another trend I'm kind of seeing is it looks like there's some rotation into emerging markets. Up on the Dow, down on dogs of the Dow, up on S&P, up on the Qs. QLD, I think, is the dividend payer on the Qs. Down on the VIX, down on Bitcoin. So yeah, after the tensions in the Middle East decline, we'll see a couple pops in the VIX on some of that hot inflation data, but then it settled down pretty quickly. Again, the positive earnings causing the VIX to drop down. I think it's down below 16 again. So this is showing up on the Russell, up on small caps. So right now the sentiment's positive on small caps. Industries, that's got to be copper. We'll see that in the futures as well. Crane shares, that's probably some China related. Healthcare very positive. Financial services negative. Utilities negative. Energy mixed. Real estate mostly positive now. Again, retreat in the bond yields. Technology very positive. Basic materials looks like mostly copper, some lithium, so maybe a rebound in lithium. And the defensive, so rotation out of defensives into technology. Some commodities, that's probably a gold miner. Bonds, 15-year plus, 25-year plus, so long end of the curve. Okay, next we'll look at futures. Welcome, Logan Flips. Thank you for joining us. Hope you're doing well. And as I mentioned, just a quick reminder that Webull's now offering futures trading, and they have a special offer till the end of the month. You can see the details of that special offer. They're offering free commissions, etc., free level 2 trading, only good till April 30th. So if you want to get those special bonuses in addition to trading futures in Webull, you can get those details in the link to our Discord. So let me grab a quick drink and we'll go through the futures. Okay, so we see, that rebound in all the indices, and the Dow kind of rolled over and went flat. Again, we've got, rebound. Looks like the S&P might be topping out a little bit. And we've got a little bit of a doji on the NASDAQ. So again, we got that rebound on, with the Microsoft, Google, Tesla, etc. Smaller bounce in the Russell. Again, looks kind of flat. Got a little bit of a bounce in the Nikkei. We'll see the yen's just been getting destroyed. Bounce in the Euro. Bounce in the DAX. Again, we got some of those spikes on, Middle East tensions, hot inflation data, but then very quick retreat in the VIX. So again, we might get some more volatility around the whatever Fed Chair Powell says. I don't expect the decision to change anything much, but what he says, we'll probably see some volatility. Again, oil has been pretty much range bound between 80 and 85, and little pops when we get the tensions in the Middle East. Looks like it's going to retest 85. Again, we saw the futures roll over in natural gas, popped up over 2, and then, pretty quickly fell down below 2. So it's probably going to be a resistance point, probably going to fill this gap again. And gold pretty much consolidating right around that 2350. We'll see it, did try to pop up to 2360 or so, then retreated. Now it's back down below 2350. So may need some more consolidation. Then we'll see if it's going to push higher or lower. Same thing with silver around 27. So consolidating around 27. And then again, we'll see if we see a push up or if it's going to break down and fall back down. So in a second, we'll look at some ETFs. Either way, we can make money. Copper, pretty much uptrending. Platinum bounced. Palladium, still downtrending. See again, futures roll over in some of these. And they gapped up significantly. Corn ran up and then topped. So on that futures rollover, we'll see a big run in wheat. So once wheat rolled over and see that run. So congratulations to any of our BeachBum traders who caught that run in wheat. For example, using the WEAT ETF, which is typically what we use to long wheat. Unfortunately, I missed that run. Cocoa looks like it's rolling over a little bit. Sugar downtrending. Lumber again bounced. Probably a futures rollover. Looks like a bounce. Again, we've seen bond yields pushing up towards that 5% level, so prices come down. We saw a little bit of a bounce on Friday, but again, trending down. Yields trending up towards that 5%. And DXY has been kind of testing that 106 area. Again, I think mostly due to the weakness in the Japanese yen. So we see that just destruction of the Japanese yen. So far, the Bank of Japan has not done anything to intervene. They decided not to change their interest rates. I think it was on Friday. And see, again, that significant drop in the yen. You see some of the other foreign currencies did rebound. So British pound, Canadian dollar, Aussie dollar, New Zealand dollar, Swiss franc still pretty weak. So we do have ETFs. In a second, we'll look at our ETFs Google sheet. We do have ETFs that you can use to also trade these foreign currencies, as well as obviously you can trade them in the futures, the Forex market. We currently trade them using ETFs. For example, we went long YCL, which is the long on the yen prior to this significant decline. So needless to say, that's pretty much underwater, but we're waiting for some kind of intervention from the Bank of Japan, and then we'll scalp that off, hopefully for a profit. Okay, so next we'll look at our ETFs. Yeah, so if anyone in the chat has a particular topic, commodity index, etc., you'd like to look at the ETFs, again, we use our ETF Google Sheet. Once we've identified a potential trade idea to long or short, particular commodity index, etc., topic, then we jump over to our ETFs Google Sheet to identify the best ETFs with the risk reward profile that we would like to be able to trade that trade idea using ETFs. Again, you can use inverse ETFs to short even in a retirement account. So again, we find that very attractive. And just a reminder, you can get at 24/7 access to our ETFs Google Sheet as well as our dividend payers and our options put ROIC Google Sheets by joining our Patreon at the All Access or VIP level. Again, you can find a link to our Patreon also in the description box below. So let me grab a quick drink and then we'll talk about some additions to our ETFs Google Sheet and cover any other topics anybody in the chat wants to look at. So firstly, I want to talk about a category of single stock ETFs by Granite Shares. So last week, Gerald Pitts had asked about AMZZ, which is a 2x long on Amazon. I found we had already had that in our ETFs Google Sheet in the research tab. We'll take a look at that in a second. Also, the Crow mentioned FBL, which is a 2x long on Meta. Get another Granite Shares ETF, and then he shared with me a link to all the Granite Shares ETFs. So we'll look at all of those, and I've added that link, the reference to the Granite Shares ETFs in the screener sheets of both of our ETFs and our Watchlist Google Sheets. So I will show that quickly a second. We'll look at all the Granite Shares ETFs, single stock leveraged ETFs. So if you go to the research or the screeners tab in either our ETFs or our watch list Google Sheet, you can go to the bottom of that screeners tab. You see we have links to the direction single stock ETFs, the yield max dividend paying ETFs, and now also the Granite Shares ETFs. So if we take a quick look at those. So you can see they have a number of long and potentially short ETFs on individual stocks. So you see they've got an Apple long, AMD long, AMD short, Amazon long, Alibaba long. There's a gold. There's commodities. There's a long leverage long Coinbase, leverage long Meta, etc. Leverage long Microsoft, Nvidia. I believe we've had NVDL in our ETF sheet for a long time. Short Tesla, 2x short on Tesla, 2x long on Tesla. So, and you can see their current prices. So you can use this screener link to, I guess it's got their net asset value and expense ratio, so not their current prices. So we do have a number of these already in our ETFs Google Sheet. For example, Gerald was asking about I think it was AMZZ. So if I do a find for AMZZ, again, you can do a find in our Google Sheet. We can see here's AMZZ. You can also do a find for Granite Shares. So I added the FBL one. That's the one. So you can see here's AMZZ that Gerald had asked about. You can see the current risk reward profile. Currently, a little above support, not a bad risk reward profile though. If you want to do that short term, not bad. Okay, FBL for Meta. So Meta is obviously in significant decline due to their higher expenses going forward. So it's actually below my support. So I need to adjust the 52-week low. So now, based on that, risk-reward profile is not that great. Again, I think Meta's got further to fall based on their increased expenses. Their year of efficiency is kind of over. Now they're spending again lots of money, losing a lot of money in the reality labs with their metaverse projects. And so again, I think significant downside to Meta. I don't think there was a short on Meta. No, there's no short. I think I asked the Crow about that, and we don't know of a short ETF on Meta yet. Well, we'll see if one comes out. So I hope that all helps. Again, you can keep an eye on any of the other Granite shares leveraged ETFs. And again, we have a number of them, both in the research tab and also in probably our main tab. So if I search for Granite there's the NVIDIA 1F long, NVDL. So if you'd like us to add more of those Granite shares to our ETFs Google Sheet, please let us know and we can do that. So NVDD, we also added the direction short on NVIDIA down as well. So we also added that in the research tab, so you can also see the risk reward profile for that one. So here's the NVIDIA short from direction. So again, pretty good risk reward. Now again, in my humble opinion, I think it's risky shorting NVIDIA. I think they've got plenty of upside. Everybody's buying their chips for their AI projects, for their data centers. So in the short term, again, I think NVIDIA will keep trending upwards. We see those pretty significant corrections to the downside, but then it bounces up. On news, people are buying as many NVIDIA chips as they can get. So again, if you're a short-term trader, you can use NVDD. Also, we talked about NVDL, etc. We also have NVDS, so several you can short-term trade NVIDIA. Let me see what other, we talked about the various longs and shorts of the technology components. So, short ARK with SARK, short LabU with LabD, short biotech with LabD. China's looks like it might be swinging back up. So yen swinging back up. The short is yang. Financial sector, so we're already short the financials with FAZ. If you heard, there's some news on another regional bank being seized by the FTC or FDIC. I think it was Republic Bank on Friday, got seized by the FDIC. So we'll see if that spurs more downside in FAZ, although KRE is the one with more regional banks. We do have so I went and searched in our tab for regional banks. So you can see the ETFs we have on regional banks. So if you want to short SKRE, you can see the current risk reward profile. If you want a long, in addition to KRE, you can use this leveraged long 3x direction. So DPST to long, SKRE to short. So natural gas, oil long, cold short, Qs short, SQQQ, long TQQQ, Oil, again, gush or drip, gush long, drip short. See, long and short, the Russell, S&Ps, silver. We'll talk again tomorrow about ZSL. So if silver does pop up to that all-time high, we'd be looking to short with ZSL. Short semiconductors with SOXS, long SOXS, XOXL. We're long TECS, which is the short on the broad technology sector. Again, Teslas. So here's some individual ETFs you can use for Tesla. There's also those Granite Shares ones. Treasuries, also treasuries for short-term trading. We saw it's been slightly volatile, although prices trending down, yields trending up. So you can short treasury prices, the long end of the curve with TBT, long with TMF. You can short 20s also with TTT, short the 7 to 10s with TYO. And then we've got several to long, TYD. Again, long volatility, UVXY, short with SVXY. And again, we saw that big run up in the wheat, and we saw, the destruction of the yen. So YCL, I don't know of a short on the yen. Well, here's an ultra short yen, so YCS. So that would have been the opportunity to short the yen on that big downturn. I didn't catch that ETF. So we do have one to short the yen, YCS, long the yen, YCL. Yeah, Ellen's pointing out that Kathy Woods, RK, has been buying Tesla, and yes, that's true, and I think that probably contributed to the bounce. But again, I think Elon Musk's presentation and talk about the future of robo-taxis, robots, AI, etc., is probably what turned Tesla around, because again, their earnings were not spectacular. Okay, grab another quick drink, and I've got one more ETF to talk about, and then we'll look at what the Fed may do. Yeah, Ellen. Yeah. She says Kathy's also selling coin. So just a note, if you don't get the daily notification of what the ARK ETFs are buying or selling, we have a video on our site. In fact, there's a playlist on ARK, and you can hear how you can get the daily notifications of what ARK is buying or selling. So I get those every day, go through them just to see what ARK ETFs are Kathy Woods buying and selling. So, okay, so the last ETF I want to talk about quickly today is SDCI. This is another broad commodity ETF. You can see it has no K1. So if you are trading this outside of a retirement account, outside of a tax-advantaged account, sometimes this is important, as otherwise you can end up with essentially a tax bill if they issue a K1 on any interest or gains that the ETF may have. So I want to briefly look at this SDCI. So if we go to that in the research tab, you see this commodity ETF. See, it's risk reward profile is not all that exciting from a near term, 1.16, 1.21 for 52 weeks, but longer term, it's got 2.34. We look at FinViz. See, it's, high, so it's pretty high right now. See, it's, mostly other, it says. So we see what it's got. It's got cocoa. And this is one of the things that was interesting about this commodity fund. It's got things like cocoa, coffee, live cattle, copper, oil, gas, etc. And I guess they mix this basket of which commodities based on performance. So I thought that was kind of interesting. Seeks long-term return, economic exposure to the performance in the commodities markets. See, it pays, 2.6% dividend. It is not optionable. So we also quickly look at its profile in the ETF database, which again, you can access these profiles via the links in our ETF Google Sheet, whether it be to the ETF database or FinBiz. So not a whole lot of detail. Active index, equal weighted, optimized commodity. Look at their listing of holdings. So they don't really have information on the holdings in the ETF database. So again, another ETF, if you want to trade, a broad basket of commodities, you can use, again, this SDCI. You can see the information for it. It'll track in our research tab of our ETF Google Sheet. Okay, you can see it's relatively high. It's got a little bit of upside. Doesn't look like it's terribly volatile. So lately ranging between 16 and 24. Does pay a small dividend. So again, another ETF we can watch to trade another set of commodities. So again, I hope that all helps. Okay, now let me grab a quick drink and we'll finish up, and we'll look at what the Fed may do now, and we'll look at probabilities for rate changes in both the Fed rate monitoring tool and the CME watch tool. So I'll go ahead and get those open. So again, we'll use these tools to try to figure out what the Fed may do now. Again, quick reminder, you can find links also to these, the Fed rate monitoring tool and the CME FedWatch tool, under the reference links section in the links section of our home page. So again, we have our frequently used tools and resources in the links section on our home page, beachbumtrading.com. So again, you can find the links to these various tools on our home page as well. We also have videos on how you can use these tools to figure out, what the Fed may do now and or in the future. So you can hear those previous discussions on how to use these tools via the links to our links in our notes. We're also on our BeachBum Trading channel. Okay, so let's look at the Fed rate monitoring tool first. So again, you get a countdown clock of when the Fed rate decision's coming out. So you can use that to see, how long before the Fed makes their decision. Get 97% chance now, 98% chance that in May they're going to do nothing. So as we discussed, I don't expect them to cut, don't expect them to raise. I expect them to do nothing, and that's what the market is predicting as per the Fed rate monitoring tool. For June, 89% chance, no change, 10% chance of a cut. So there's a few holdouts think they're still going to cut in June. July, got 70-30, so now we're up to 30% chance of a cut in June. September, we've got more than 50%, so 44% one cut, 12% two cuts, 42% no cut. So the majority think we'll get at least one cut in September. November, again, mostly one cut, 20% now two cuts, only 33% no change. And by December, again, 40% one cut, almost 29% two cuts, only 20% no change. So you can see now we're down from, originally the market was, overly delusional, thinking 6 to 7 cuts, even though the Fed had told us 3, but now the market is underestimating the 3, and now they're down to about 2, 1 or 2 through the end of this year. So I do think, given the high inflation, that the Fed's going to backpedal their 3. Again, we don't get another SEP decision until June, and this quarter we've again had hotter than the hotter inflation than they would like. Inflation continues to smolder. So again, I think they're going to backpedal their 3, and they may lower that projection in June. So again, now the market thinks, what may the Fed do now? Market thinks they're going to do nothing now, and the first rate cut's not expected till essentially, possibly July, but most likely September or later. So if we also look at this data in the CME FedWatch tool, again, you got a countdown clock. Scroll through the various months at the top based on the meeting date. So again, we see May, 98%, no change. June, 89%, no change, 10% one cut. July, 69%, no change, 29% one cut. September, again, 43% no cuts, 44% one cut. So now, again, the probability is shifted towards September. Got 10% two cuts. November, majority of the largest percentage is one cut, 33% no cuts, 20% two cuts, so a little more distributed as of November. In December, again, 40% one, 30% two, 20% no change. So again, the market is now expecting, the first cut probably most likely to come in September. And now again, projecting, less than 3 cuts. There's only a very small percentage in the three cut this year camp. So they've shifted significantly. We'll see if the Fed sticks to their 3 rate cut previous projection. But again, I think they're going to backpedal that based on the resilient job market and the hotter than they would like inflation that we've gotten this quarter. And again, I think Powell's going to say they need more data, they need more confidence. They're in no hurry to cut rates anytime soon. They need to beat inflation. Inflation is not coming to their 2% target. Again, I think they're going to continue to state that they're sticking to their 2% target, whether they adjust in the future or not. But I think that's what they're going to say. So that's what may the Fed do now. That's what the market is expecting. Now, again, if something comes out different than expectations, the market could react, pretty significantly positively or negative. It's all going to, in my humble opinion, again, depend on what Powell says in the conference and how he answers questions on when the Fed's going to cut, how many cuts, how soon they're going to cut. Again, I think there's going to be a lot of volatility around that and a lot of questions around that focus. So our other strategies going forward on how we can make money trading in these markets. We've been talking about how to make money trading in April. So one link I added recently, since we're headed into May, is a previous video on watch out for the sell in May and go away crowd. So that video discusses, we're headed into May. Some people maybe try to front run that common adage, sell in May and go away. So they're expecting a sell off. Some people may want to try to front run that sell off and sell early. So again, if we get a more, pops, all-time highs in the Mag 7, you might see some significant profit taking, particularly in those high flyers, and they may try to front run this sell in May and go away theme. You can also hear our discussions on how to make money trading in April, and I also added the links to our previous videos on how to make money trading in May, and we'll probably discuss that in more detail next week, but you can access our previous videos and our thesis, don't sell in May and go away, what we think you should do instead. So you can, again, listen to all those videos and in the spring. So again, we'll probably discuss all of that in more detail tomorrow or next week. And tomorrow we'll also look at dividend paying stocks, and we'll talk about using option strategies to make money trading, regardless of what the Fed does now and or in the future, and again, in any market conditions. So I know I ran a little bit long. If I missed your questions, please put them in the comments to this video, and or you can contact us, ask questions in our Discord. We'd appreciate it if you participate in our Discord, and you can ask us questions. Please tag us in the Discord so we know you're asking a question. Our tag is BeachBum Trading, all lowercase, no other characters, numbers, etc. Anyone else is an imposter. Also, we would not direct message you or contact you asking for money or anything. So if anyone does that, that's probably an imposter. And if you let us know, we'll ban them pretty quickly. So again, if you have any other questions, put them in the comments to this video. Contact us in the Discord. Also, you can find links to all of our social media sites in the links section of our homepage. Again, beachbumtrading.com, bum without the U. So again, you can contact us via the links to all of our social media sites. Also find the link, the free invite to our Discord as well in the link section on our homepage. So again, we'd love your feedback on what we can do to improve our weekly trading game plans, any of our other videos, our tools, resources, community, etc., to add more value for all of our fellow BeachBum traders. And again, we really need your feedback as to what we can do to add more value. What can we do to help you make money trading, help you succeed in your trading career? So we hope that you like this content. We hope you'll smash the like button, help us to try to get the YouTube algorithm to eventually show us some love and share our content with other traders. We greatly appreciate it if you would also directly share our content, repost our content on various social media sites, invite your fellow traders and friends to join us in the live chats and the Discord, etc. And again, we really need and appreciate all your help and support and participation. And we hope you will come back again tomorrow for part 2 of our weekly trading game plan for this trading week of April 29th through May 3rd, where tomorrow we'll use all of this analysis on what may the Fed do now, all of our other market analysis, trading ideas to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. And again, we'll also talk about dividend payers and several option strategies to also make money trading while we wait to see what may the Fed do now. So same bat time, same bat channel, 10 a.m. on Sundays for part 2 of our weekly trading game plan. So again, thank you to everyone that participated in the chat. Thank you to everyone that's watching after the fact. And again, we look forward to seeing you all tomorrow. Thank you again and have a great day.